domestic institutional investors dominate D Street. Now, what does this mean? Why are we saying this? Well, DIIs have surpassed FPIs after over 2 decades, which essentially means that domestic institutional investors are now bigger shareholders versus foreign portfolio investors in companies on NSE. Now, what does this mean? Of course, it's a big boost for domestic market participation at large. But what does this mean? And of course, the long term trend going forward, how can India continue to dominate that and have a growing appetite for equities and not have global cues impact or have it impact India or India stock market at large as much going forward? Well, of course, to explain this further, I'm joined by two senior market veterans. I'm joined by Amrish Balega. I'm also joined by G. Chokalingam. Thank you both for your time. Amrish Balega, so clearly this is a big boost for domestic market participation. This is the first time that this has happened, that DIIs, domestic institutional investors, are surpassing foreign portfolio investors in over 2 decades.
Right. See, basically the crossover has happened right now, but then we've been witnessing this phenomena for the last 3 to 4 years, especially post-COVID. When the retail investors started coming to the markets, they started, having SIPs with mutual funds, and the sort of flows which are coming to mutual funds currently is about 22 to 23,000 crores every month, and
Mhm.
that needs to be get invested in the markets, and because of which we have seen that in the last 3 4 years, consistently the local funds, the mutual funds, equity holding has been going up. At the same time, we have seen that FIs have been consistent sellers in the last 3 4 years. Like except for a couple of bouts here and there, and this has also sort of cushioned the sales of FIs in the last 3 4 years. Because if you see in the last 10 15 years, whenever the FIs used to sell, the markets used to crack. But then in the last 3 4 years, we have seen that there has been a very extremely good cushion being given by the domestic funds. And the way the SIPs are continuing, I think this trend will continue, and we should see the mutual fund holding still moving up. I just hope that going ahead, FIs would start investing again back into the markets, because clearly, I think this is the only place to invest in globally. I think at the emerging markets, we are one of the best performers, but I'm quite sure that the domestic fund holding will continue to move up. So they would lead, possibly the FIs would follow going ahead.
Right, G. Chokalingam, do you agree that, of course, domestic institutional investors now really leading, investments, and of course, foreign portfolio investors are now following? Of course, this is a new trend at large, and how do you see this developing going forward?
Yeah, this is a yes, I agree. This is a remarkable achievement. Today, roughly about 17% of odd domestic institutions hold. Marginally less than that, the foreign investors hold the stakes in the Indian equity. Added to that, nearly 10% of the shares are held by directly the retail investors. So together, DIA, domestic institutions, and retail investors, they dominate the market to the extent of almost half of what is floating in the market. Roughly half of the holding is held by promoter. So if you take out the balance, so today, the domination is so huge by domestic institution and retail investors. Here, very interesting point is that even the money to domestic institution ultimately comes from the retail investors only, in the form of insurance premium or through contribution to the mutual fund to a large extent. Therefore, this is a remarkable development for two more reasons. One, if you look at FIIs, the current holding value is almost around 750 to 800 billion dollar on the investment they invested from 1992. And if you net out the cost, they are sitting on 400 billion dollars. So this is a phenomenal wealth creating market. Now in the future, it is going to be dominated by retail investors directly, also through domestic institutions. And second, this will also reduce the volatility. Particularly if you look at the Lehman crisis 2016, deflationary condition, both conditions, Indian market fell 20% to as much as even 50%. In both cases, India has nothing to do with this. India had nothing to contribute, but it is only because of the fall of American institution and fall of the Western economies we were punished. That is mainly because FIs were dominating. In future, their domination will come down a lot, and risk to the market will come down, and if domestic institutions will keep making a lot of wealth in the long term So therefore, that money would come back to aggregate demand in the system, and economic growth also will get a lift, and foreign outflow also will be mitigated in relative terms. All these are positive points, and I think we have an amazing story in the long term.
Right, Ambrish Balika, do you agree that overall this is net positive? And of course, how much of this is then led by new investors on D Street?
See, this is net positive because end of the day, it is the domestic money which is keeping the markets holding up. And I think in the longer run also, we should continue seeing the same because after a long time, or I would say this is the first time that we have seen so many retail investors coming in and staying on for long term. So I expect this to continue, no doubt.
Right, and Jito Kalingam, do you agree that this is a long term trend and a long term message then? It's not just a March quarter trend, as it were.
Certainly, yes. BSE took 145 years to get 4.5 crore investor base, but in the last 7 8 years, BSE or NSE they added more than 10 crore new investors, and even today it is only 22 crore number of investors on a population of around 145 crore. So it's a long way to go, and that is already reflected in relative outperformance of small and mid cap. If you see the history of last 20 years, every third, fourth year, a massive fall in small and mid cap happened, and the large caps are outperformed. But this is the first time 4 years in a row the small and mid cap outperformed. That means a lot of wealth was created for retail investors who largely invest in small and mid cap. That would again in turn mean that they are attracted to the market. This attraction would continue. Even the last week, Saturday ending, 6 lakh new investors have entered the market. So it is at the rate of 5 to 6 lakh continuously they are entering the market for the last 2 years, and that trend would continue. And FII holding, perhaps within next 5 to 8 years, it would come down below 10%. So the 90% of the equity would be held by Indian promoters and Indian retail investors and corporate. That's going to mean a lot. We never make a lot of money through current account trade, and we always have a capital account deficit, is surplus in terms of borrowing and getting liability from the foreign sources. That balance of payment also would change to some extent in the next 5 to 8 years. So all these are net positive for economy as well as for Indian equity markets.
Right, Ambrish Balika, lastly, do you agree? And of course, how much this, in the midst of course, geopolitical concerns, how much does this then mean that look, global cues will not impact Indian equities or, of course, domestic investor participation as much going forward?
Yeah, see, global events will surely affect. But the question is how much? Because earlier, any global event would have affected the Indian markets quite a lot because we were dependent on FIIs. And they normally are the first ones to react as far as global events go. But then, with the sort of participation which we are seeing right now, like I said earlier, it will clearly provide that amount of cushion. And since the money is coming continuously, every month, decent amount of funds are coming in. That gets, that needs to be invested, and because of which you see a continuous flow into the equity markets from the mutual funds, which will, at least help the markets hold up. And whenever we see that the economy has bounced back decently well, our earnings are consistently improving, which again I hope to see that happening over the next few quarters, you will have the new investor FIs again coming back to the markets. And both these should, in fact, take our markets to newer highs, may not be this year, but surely in calendar year 26.
All right. Thank you both for sharing your thoughts and, of course, decoding this for our viewers, a fresh milestone, as it were. Thank you for your time.
Thank
Thank
you.
you.